I've been surprised by all kinds of things in the last 10 years about the economy. You wouldn't try and time the purchase. You're living off your paycheck from week to week. You want to have When I look at a lot of figures just in connection with our businesses, I like to get numbers. So I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses. And it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses, what those numbers tell me. They're interesting. They're not guides to me. If we buy a business, we're going to have good years, bad years, in between years, maybe a disastrous year some year. And we care a lot about the price. We do not care about the next 12 months. I've been surprised by all kinds of things in the last 10 years about the economy. I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes or you read Samuelson, you read any of them, they do not get into a negative rate. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. And that's one reason economic predictions just don't enter into our decisions. 54 years now. We've never made a decision based on an economic prediction. We make business predictions about individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right. And I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. You may know he was a big shareholder of Berkshire, but they make guesses, and there's so many variables. I mean, in the hard sciences, if an apple falls from a tree, that it isn't going to change over the centuries because of anything or political developments or 400 variables that go in. But when you get into economics, there's so many variables, and the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash. If I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children had grown, the house was paid off and everything, I wouldn't worry too much about having a lot of cash around. Well, if you have to closely follow a company, you shouldn't own it. No, if you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for, I've got one farm that I bought in the 1980s and I've been there once, it doesn't grow faster if I go and stare at it, I can't cheer for it, more effort or something like that. And I know there's going to be some years when prices are going to be good and some when the prices aren't going to be good. I know there's years when yields will be better than others. But about the farm, it just doesn't, I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre. And now in a good year, it'd be 200. We've really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at cotton, or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that. If you own the best auto dealership in town, the best brand, good running it, you wouldn't drop by every day and say, how many people have come in today, or I think interest rates are going up a little. Maybe it'll slow down our sales or anything. You buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days. And things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important. There's always been a struggle between the retailer and brands. I mean, if I've got a terribly weak brand and I want to get into Walmart, I'm not going to be able to do it. Offer all kinds of crazy concessions, that I want to be in Walmart if I have some sort of consumer packaged goods. The negotiation is way different if you have something essential versus non-essential. 10 years ago, Costco tried to get rid of Coca-Cola. Costco's got terrific loyalty among customers, and their own Kirkland brand is a $39 billion brand now, and it moves from category to category, and they only started in 1992. They know brands, but in the end, they put Coca-Cola back in. If it had been Royal Crown Cola, they wouldn't have had to put it back in. So there's always that struggle between the brands, and there always will be. But the retailers net, it has been moving in their direction. But there's a lot of games I miss. I would have missed Microsoft even if I got into no bill earlier or something. Those just aren't my games. I don't worry about the things that I miss that are outside my circle of competence. I have missed things that were within my circle, and that's a terrible mistake. Those are my biggest mistakes. You haven't seen them. It's not a mistake because I miss Netscape or something like that at all. I would say that maybe 5% of the companies or 10% of the companies at most are within an area of my circle of competence. There's something I should be able to understand. If I'm going to have a partnership with somebody, I want it to be compatible. It is, so by actions and by communications and everything, I want to attract the people from the public market that I want, and I want to keep the others away. Costco was built. Saul Price, who started the Price Club, that thing, he sat down and figured out the customer he didn't want. And he set up a system that would keep away the customer he didn't want. Who did he not want? He didn't want somebody buying a quart of milk with somebody behind him with a basket of $200 worth of goods waiting for that. So he put in a membership fee, and by putting in a membership fee, he killed all the drop-in business, the business that belonged to the 7-Eleven. We want Berkshire to keep out people who have expectations. Good for them, and I hope they find somebody they fit. But if you're going to run a church, you want your seats to be filled by people that are generally want to listen to your form of religion. And you don't want it to change every week and say, gee, I need a new group, and I'll go out and talk to a bunch of investors and get them to come to my church this Sunday. Because there's only so many seats in the church. There's 1,645,000 or so A-equivalent shares, and those are the seats. And I want them occupied by people that are on the same page I am. They're businesses I understand, and I like the price at which they're selling relative to their future prospects. I think 10 years from now that they'll be worth more money, and I feel there's a very high probability I'm right. And I don't think they'll turn out to be the best investments at all, the whole panoply of things you could do, but I'm pretty sure that they won't disappoint me.